Key Wall Street indices snap a 4-day gaining streak. The Dow Jones and the S&P close lower while the Nasdaq ends with gains. Headline indices also post the first monthly loss since February. Stocks in the Asia-Pacific trade mixed even as China's factory activity contracts for a fifth straight month. The gift Nifty is also implying a negative start for the Indian market. Oil rallies. Brent crude rises to nearly $87 a barrel, led by a larger than expected reduction in U.S. crude inventories. The high likelihood of Saudi Arabia extending voluntary production cuts also supports prices. India reports 7.8% GDP growth in the first quarter. This is slightly below the RBI's estimate of 8%. Agri growth disappoints at 3.5%. Growth in services sector remains below pre-COVID levels. Growth in private consumption and gross capital formation remains positive. The fiscal deficit, meanwhile, crosses 6.06 lakh crore, 33.9% of the annual budget estimate. Nomura sees modest growth for passenger vehicles, but good traction in medium and heavy commercial vehicles ahead of August auto sales numbers, which will be released today. Demand for small cars is expected to remain subdued, while two-wheeler retails could reflect improvement. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Well, it's the last trading day of the week, but first day of the month. So interesting times, but of course, we do have a lot to catch up on. We've got the GDP data as well. And even the U.S. markets, they were subdued in overnight trading session. And we just got the Chinese data. Caixin manufacturing PMI has come in at 51 versus an estimate of 49. So that has been a better data than what was expected. But as always, let's take a look at the Asian markets. They are actually mixed right now. So we do have some of them trading in the green. So Taiwanese indexes is up 66 points. The Hang Seng is shut for a holiday today. The Straits Times as well. But the Nikkei is up 0.5%. We have the Kospi, which is lower in trade right now. But if we look at the gift Nifty, because that's what will decide the movement in our own markets, that one is implying an open in the red. 20 points lower there is the implied open for our own markets as per the gift Nifty rates right now. But let's move on and listen into what U.S. Commerce Secretary Gina Raimondo about U.S.-China trade ties and her meeting with officials in Beijing earlier this week.
I'm the first Commerce Secretary to be on the ground in China in more than 5 years. So the lack of contact and discussion has certainly not been helpful to solve any problems. But I was very clear with my Chinese counterparts that action speaks louder than words. Right now, it's getting tougher to do business in China, not easier. And I'm hopeful. Privately, I was able to be a bit tougher in my conversations. And I was very clear. U.S. business wants to do business there, but they need a predictable, transparent situation on the ground.
Okay, that's the word coming in from U.S. Commerce Secretary. But with that, let's move on. In the U.S. markets, Wall Street ended the final session of August mixed. The Dow closed with a cut of nearly 170 points, while the S&P 500 ended with a marginal loss. The tech-heavy Nasdaq index, meanwhile, eked out a small gain of 15 points. All three major indices posted losses in the month of August. However, a string of positive sessions earlier this week helped stocks recover some ground. The street is now awaiting the August jobs report due later today. CNBC Steve Kovac gets us a wrap of all the action on Wall Street.
U.S. markets were mixed Thursday to close out a tough August, even after 4 straight days of gains. The Dow dropped 168 points, the S&P 500 down 7 points, and the tech-heavy Nasdaq ending its worst month of the year, up just 16 points. Average mortgage rates slipped this week after a 5-week climb to more than a 20-year high. The average is now the lowest level seen in 2 weeks at 7.18%. The modest drop could be a relief for potential home buyers who are facing limited inventory and rising prices. JCPenney is planning to spend more than $1 billion to revive its stores and online presence. According to the company, stores are getting a new layout with one checkout area, better Wi-Fi, and brighter lighting. Plus, the website and app will see more supply network updates with more efficient delivery. The retailer is racing to catch up to competitors, including Macy's and Walmart, that have also been upgrading the in-store and online experience. That's what's happening here in the U.S. Back to you, Mumbai.
Okay, all right, that's the Wall Street action, but let's stay with the US markets and listen in to global chief economist at Citi, Nathan Sheets, talk about the likelihood of a recession.
We continue to expect a recession, most likely during the first half of next year, but we're not seeing any evidence yet of it in these data. I think on the one hand, you have a gradually moderating, and I would even say slowing, but a gradually moderating economy. And on the other hand, we're seeing gradual evidence of ongoing disinflation.
Okay, with that, let's now get you the final update in our global market wrap this morning. European stocks ended Thursday's trading session mixed following the Eurozone inflation print, with the French CAC about 48 points lower, the German DAX gaining 55 points, and the British FTSE closing about 35 points lower. The Pan-European stock 600 closed at the day's low after a volatile session. Inflation in the Eurozone was steady in the month of August, coming in at 5.3%, but higher than estimates of 5.1%. ECB Governing Council member Robert Holzmann said data shows that inflation remains persistent and the latest figures pose a conundrum for the European Central Bank ahead of its September 14 meeting. Okay, we'll keep getting you more updates on that one, but that's the global market action. Let's talk about how these cues will impact our own markets. We have the GDP data, the auto sales number, and a lot more. And our research team is joining in to tell you how the trade setup will look like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, good morning and happy Friday to all of you. Rima, let me come to you. What is the market setup looking like today?
Well, the start is expected to be on the quieter side. We've got flattish cues coming in from the global markets. The Dow, the S&P 500 mildly lower, the Nasdaq inching up a bit of gain. But yesterday's market action seems to suggest that there could be some weakness in store. So yesterday, markets opened flat. They trended lower through the close of the trading, trended lower throughout the trading session, and finally ended with a cut of about close to 100 points. We ended around 19,250. Just about 20-30 points away from the intraday low. Now, the intraday low is also very crucial because yesterday the intraday low was 19,223. This practically coincides with the August series low of 19,229. So in a way, the Nifty's formed a double bottom at that level. We went down to that level and rebounded close to about 30 points. So in the immediate term, the street will watch out for whether the 19,220, 19,230 level holds out. As you pointed out, there are a lot of cues to contend with. The Q1 GDP print, we'll talk more about it, at 7.8%. In terms of flows, we had the DIIs buying 4,382 crore in the cash market. The FI sold 2,973 crore. You've got the August sales numbers to track. Crude prices have inched up, and now it's practically at that $87 per barrel mark. On a week-on-week basis, it's higher by close to 5%. So that, considering the way monsoon has been, and the impact it's had on food inflation, and now crude prices rising, inflation is going to be a real worry that the markets are going to be talking about. Yesterday, IMD also held a press conference, and they gave an update for what the month of August has been. 36% efficiency, though they did say September is going to be a normal month. But despite September being a normal month, for the full monsoon period of June to September, we're still likely to be below normal. Back to you.
Okay, they thought that August will be normal as well, so it'll be important to see how September pans out when it comes to rainfall. Thank you, Rima, for all those cues. Surbi, you have all the stocks that are on our radar today. Take it away.
That's right. So first one is TV18. Now Viacom 18 has won the TV and the digital rights for the Indian cricket team matches for a period of 5 years. Next is 5-Star Finance. Sources say that PE investors are likely to sell up to 8.8% stake in the company via block deals. The price is going to be 724 rupees per share, which is nearly a 6.2% discount to the current market price. Gujarat Gas will also be on our radar. The company hikes industrial gas prices to 43.3 rupees per SCM. This is the second price hike taken by Gujarat Gas in a month. India Pesticides, the company acquires 11,500 square meters of land in Uttar Pradesh. Navneet Education will also be on our radar. The board approves a composite scheme of arrangement where they're going to merge the Gen Next students and also demerge the EdTech business of Navneet Future Tech with the company itself. And lastly, Genius Power, the company gets orders worth 2,250 odd crores.
Okay, all right. A lot of stocks in focus, but let's talk about the F&O space. Manglam is joining us now. Hey, Manglam.
Good morning. So you said happy Friday is the last day of the week, but it's also the first day of a new month and a new series as well. So what will we say? We say hello September. Well, September in the past has been, September series that is been known for big moves on either side. So if you just take a look at the last 3 September series, you would see that, the last one we saw a decline of nearly 704 points. The previous one, the one before that, we saw a gain of almost 1,000 points. And the one before that was a decline of 754 points. The one before that actually was a gain of 600 points as well. So big moves on either side is what September promises. How has August fared? 406 points lower in the August series, the first negative series that we've seen in the last 5 itself. The rollovers have been largely in line at 78% from August to September. And the 3-month average has been around 77% itself. So that's no problem there. And also at the same time, the Nifty open interest is about 1 crore shares. The last 3-month average out there too is 1 crore. So no real worries. We're going pretty much light on an even keel. FIIs, they started the August series with long exposure of 59%. The Nifty was down 406 points. But now they've, moderated their positions. They're starting with 51% long exposure at the start of September series itself. So it is an even keel. All things that we will be watching out for will be a bunch of triggers. The first one, of course, the end of this week, the next week, we have the G20 summit. Then we'll also watch out for global macro, central bank commentary coming in. Institutional flows, extremely important because we saw a lot of FII selling in the month of August. Let's see whether that continues or not. And also the El Nino impact on monsoon and rural recovery because August saw a big deficit in rainfall. Let's see whether it makes up for in September or not.
Okay, all right, guys. Thank you so much for joining us and prepping us up for this trading day ahead. Have a great day. With that, we'll do one thing. We will slip into a short break. When we come back, India reports GDP growth of 7.8% in the first quarter. More on that on the other side. Stay tuned. Welcome back. Well, before we talk about the GDP data, let's move on to a CNBC TV 18 exclusive. There could be some consolidation in domestic pharma with Torrent and Cipla deal in the works. Ekta is joining us with what she's picking up from her sources. Ekta, good morning.
Morning. Thanks very much for that. Well, what I am picking up from my sources is that, yes, Torrent has believed to have signed a non-binding bid with Cipla. And they could have been, they are in the process of financial due diligence at this point in time when it comes to Cipla and evaluating the promoter stake buyout. Now remember that the ticket size with the open offer is quite large. It's over 50,000 odd crores. So there have been question marks on how exactly Torrent, which has around gross debt of around 5,000 odd crores, will be able to even afford such a huge transaction despite their past history when it comes to successful acquisitions in India. So the thing is that we do understand from sources that they are looking at PEs. They are in talks with a consortium of PEs according to my sources, and separately they could be looking at institutional financing for this particular deal as well from international sources. International institutional financing is something that they could be exploring. We do understand that they are currently in talks with 3 to 4 PEs in terms of seeing whether there is a consortium possible at this point in time. Now, why exactly is Torrent so keen on Cipla is because they do see synergies coming across with a company such as Cipla. They do have an extremely strong India business, but the overlap with Torrent is expected to be limited to just about 5% of sales. Separately, they will have access to the US markets. Remember that Cipla is doing $200 million in terms of quarterly sales from the US, whereas that is even more than what Torrent is doing in 1 year. So the accessibility to the US markets, to South Africa, to India will be something that Torrent is looking at quite keenly. We have reached out to both Torrent and Cipla. We are awaiting comments from both of them at this point in time. We do understand that there could be a possible final bid as well in just the next couple of weeks.
Okay, all right. Thank you so much for joining us with those important details, Ekta. Of course, this is a big story that we are tracking as well. So we'll get you more details as and when there is any update. But moving on to the big macro cue from last evening, India's GDP for the first quarter grew 7.8%, and this is slightly below the Reserve Bank's estimate of 8%. Agriculture growth slowed down to 3.5%, and growth in the services sector remains below pre-COVID levels. However, growth in private consumption and gross capital formation remained positive. Lata Venkatesh joins us now with the details. Lata, take us through the numbers.
Yes, you'll have to say that it's a tad disappointing because even if our poll was 7.9%, the RBI's forecast was 8%. So at 7.8, you can say that clearly there are no upside surprises over here. There were some people who were expecting that although the RBI said 8%, maybe an 8.2 or 8.3 is not out of the box. But this clearly is a disappointment in that sense. Agriculture has been a little disappointing at 3.5% because the expectation was it would be at least over 4%. This is the Rabi crop of Jan, Feb, March, which gets counted in April and May when it comes into the mandis. We had a good Rabi crop, so this 3.5 is a bit of a disappointment. We will have further disappointments in agriculture in coming quarters. Mining and mining was okay at 5.8. It's manufacturing that's a bit of a disappointment at 4.7. Construction has come in at 7.9, but there were people who expected that would be even better with state and centre doing their bit on capex. That was expected to be better. 9.2 is an important number. That is trade, hotels, transport and communication. It is the big services sector. Now, that had been maimed a lot in 2021 and it's still picking up. But unless it had grown by 13 or 14%, you couldn't have called it really recovered. It's just 9.2%. So clearly, that's one sector that is nowhere near what it was in pre-COVID times. Although 9.2 looks like a big number. The real good performer this time has been finance, real estate, insurance. That sector has thrown in 12.2. Very good number. Public administration and other services also at 7.9. Very good. Now, if you look at GDP from the expenditure side, then you wonder how much is invested, how much is consumed. In that split, private final consumption expenditure has grown by 5.9%. Very good. Because Q4 it grew only by 2.8. Government has not done much in terms of helping consumption expenditure. It's actually fallen, government consumption, by 0.8%. But gross fixed capital formation has grown by 7.9%. That's also good. So those are the positives. The fact that capital formation and personal consumption are good. Those are the positives. But overall, tad disappointed with this number. And especially when it comes on a day when gross tax revenue also showed it's a very mediocre 2.8% growth for April, May, June, July. So overall today, the state of the economy picture not very bright.
Okay, all right. Thank you, Lata, for joining us with your take on the GDP numbers. But let's listen in to what Chief Economic Advisor V. Anant Nageshwaran had to say regarding the GDP data.
The real GDP has registered 7.8% growth year on year, and it continues the momentum that we saw in the fourth quarter of the last fiscal year. And these numbers are on a slow and steady upward trend, which is good. Both RBI and the Ministry of Finance are very comfortable maintaining our estimate of 6.5% for real GDP growth for FY24.
Meanwhile, India's fiscal deficit for the first quarter of FY24 has risen to 6.06 lakh crore rupees, which is 33.9% of the full year target of 17.87 lakh crore rupees. The 6.06 lakh fiscal deficit figure is also a significant increase from the 3.41 lakh crore deficit recorded last year. Okay, let's move on. Viacom 18 has bagged a 5-year deal from BCCI for digital and media rights to broadcast cricket matches. It was a 3-way fight between Disney, Star India, Sony and Viacom 18. Viacom 18 will shell out just under 2,900 crore rupees for the TV rights and more than 3,100 crore rupees for the digital rights. It will spend a total of nearly 6,000 crore rupees for the broadcast. According to data from ESPN Cricinfo, the company will be paying just under 68 crore rupees per match. This is 13% higher than the 60 crore rupees per match paid by Star India when it won the rights in 2018. Viacom 18 also holds the digital rights for IPL along with the TV and digital rights for the Women's Premier League. Okay, of course, standard disclaimer is flashing on the screen. Network 18 and TV 18, the companies that operate CNBC TV 18 are controlled by an independent media trust, of which Reliance Industries is the sole beneficiary. With that, we'll slip into a break. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. You're watching Power Breakfast on CNBC TV 18. Well, we spoke about the macro data. It's time to talk about commodities. Manisha Gupta is joining us, as always, with the update from the commodity space. Hey, Manisha, good morning. Happy Friday to you.
Happy Friday to you too, Sonal. And, the markets are doing quite well when you look at the day-to-day, especially the crude oil prices. If we break above $88 a barrel and we are trading at 87.5 almost, it would be a 9-month highs for the crude oil prices then. For the week, we've seen prices gain up by 5%, and for the month as well, for the month of August, that is, the crude oil prices are up by nearly 6%. The statements from Russia announcing deeper output cuts for the month of October without giving details is what has led to prices gaining up. Saudi Arabia also says that they would be rolling more cuts into October. So it is the OPEC and allies which at this point in time seems to be moving the market. Apart from that, it is also the U.S. crude stocks which fell by 10 million barrels in this week versus the expectation of 3.3 million. That seems to be supporting. But as we've been saying, all these markets will watch out for the U.S. non-farm payroll data that comes in today. The dollar index decline of 0.5% in this week also has been supportive for commodities across board.
Okay, all right. So positive cues from the commodity markets as well. Thank you, Manisha, for joining us with all those details. With that, it's curtains down on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next with all the market action.